Alright, what is up YouTube? I hope you guys are having a good day. I'm going to go ahead and do a lot of different things in this video, but we're going to break down USD why it was the trade I chose. We're also going to go over CAD JPY and AUD JPY, which quite frankly, if you're looking at this chart right now, I thought we were getting tagged out. I didn't think this one was going to happen. And if you look at the other pairs, CAD JPY and AUD JPY, I'll show you guys right now, and we'll go over this more in detail in the video. Both of these had super clean trades that you would have entered, up in here on CAD JPY, and you would have entered, right around in here in London on AUD JPY. And both of these, all three pairs that we kind of, marked up and put in our pairs of interest. Just so you guys know, when you are trading, you guys should do that. Well, you guys should have a separate section. That way you can eliminate all the noise after you analyze all your pairs and whatnot. Kind of get a list of like 2 or 3 pairs where you're like, I'm going to focus on these today. Today, this was my list of 3 pairs, all JPY pairs, and all 3 played out. The 2 that I decided not to take happened to play out a lot cleaner than the pair I did decide to take. But I'm going to kind of go over, everything start to finish. I'm also going to do this. If you're new to this channel and you don't know what we're doing, we're trading candle continuation theory. I'm going to show you these 3 simple steps on how you can find these setups. They appear every single day. We're using 2 time frames, the daily time frame and the 15-minute time frame. I do the same strategy in New York session on the 1 hour and 1 minute. But for the sake of this video is a daily and 15-minute trade. I'm going to show you how we got to this. And then for those who are, not new to the channel and been here a little while, we're going to go over trade selection too. Basically, why did I choose US dollar JPY against CAD JPY, AUD JPY? And that's how you guys are going to continue to grow and get the value. Because at the end of the day, it's this. You want to be able to take 1 trade a day that is the highest probability setup possible. And if you could do that, your win rate's going to skyrocket. So we're going to jump straight into this, and I'm just going to take a sip of this coffee. You guys know these videos are always unedited. All right, so going to the daily time frame, as if you had nothing on your charts yet, what we're going to do is we're going to pretend we're back in time, and we're looking, the very first thing we're doing, I'll actually take everything off of the chart. I'll even take the trade off of the chart, and we'll just redraw everything on. We're going to bar replay as if I sat down in front of my computer and I hadn't done anything whatsoever yet. Now what I'm doing is in order to get to step 1, and step 1 is bias, you have to come to the charts when the daily candles close. If you guys are familiar with Forex, if you're familiar just with the markets in general, there's a rollover in the day. When the daily candles close, spreads widen, so on and so forth. You have an opportunity to really mark the charts up without having to feel like you got to get anything, because if you do get into any trades, between that little 5 p.m. to 6 p.m. Eastern Standard Time window, you're going to get taken out by the spreads. So not only do the daily candles close there, but you also have like literally a hard force against you, a hard stop in preventing you from taking trades because the spreads are so wide. You'd instantly be significantly negative. So you come to the charts when the daily candles close, and I'm going to break this down the best I possibly can on a daily basis. When we came to USD JPY, we see the daily candles are closing lower. That's how you determine your bias. Are daily candles closing lower or higher? It's as simple as that. Anyone who tells you you got to do this or that, and all these different things in order to determine daily bias, they're out of their mind. Trading is simple. We make it complicated. So, which direction are daily candles closing? Without drawing anything on the chart, you can see daily candles are closing lower. So, what are we doing? What we're going to do is we're going to mark up all the points that we closed lower than. Well, obviously we closed lower than here. And then if you look to the left some, you see other points that you closed lower than that hadn't been touched before. So, a good example of this is this point right here. You can see it hadn't been touched by anything until this daily candle closed through it. Now, if we were to mark up like this point right here, you can see the previous day kind of interacted with it. We're not going to consider that point for this fresh daily candle closed lower. What other points did we close through that hadn't been touched yet? You can see right in here, this point had been closed through, and then also this point. We've, I think, even got some more levels down here. Yeah, you can see there was a ton of levels we closed through on USDJPY. We do not retrace all the way to those top ones. We actually get our trade off of these lower ones. And you can see these were all the lines that you closed through on USDJPY. Now this is determining, first step is your bias. We know we want to sell. We know we're bearish. Daily candles are closing lower. Now this is step two. Step two is where do you want to trade from? This is it right here. You want to trade from one of these levels. If the daily candle is closing beyond all of these lows, you got to look at these lows as swing points. Sorry for that popping up on the screen. I'm using my iPhone as a new camera. Actually, it's pretty nice. I kind of like it. Super clear quality. But we're going to get a professional camera down the line. The iPhone camera is what a bunch of my buddies use that stream and trade and have YouTube channels and whatnot too. So they put me on. My other camera was quite blurry for a little bit, and we're in the new setup. So until we get like a real serious camera, we're going to use the iPhone. So sorry about the low battery popping up. But neither here nor there. Step two is you need to determine where you're going to trade from. If you know that you want to sell, where do you want to sell from? Well, these are swing lows that you just closed below that hadn't been touched at all before. So that makes them relevant, right? If they had been interacted with before, those are price points and volume points that had already been touched, had already been played off of. And yes, they can be played off of again, but it's not going to be as significant as it would be if they hadn't been touched before and now we're closing below. So now the next part is we've determined what we want to do, our bias. We want to sell. We determine where we want to sell from. And step three, the final step, is where do we want to target when we sell from one of these points? Well, that's obvious. If we're in a downtrend and we want to continue lower, we just are obviously going to run this point of liquidity, right? And why is this point of liquidity significant? It's because if you understand what retail traders are trying to do, they're always trying to reverse the trend. So retail sees a massive move downward like this, and what are they trying to do? They're probably trying to look for, oh, we swept liquidity over here, let's go. We want to reverse the whole thing, and they want to catch some crazy, 4-hour trade in the opposite direction, and they want to flip the whole thing on its head. And that's why this works so well, is because everyone and their mom is trying to reverse the trend. So we're trying to go with the trend because we know that we're going to do the opposite of the herd mentality. That is the whole point of CCT. It's candle continuation theory, not candle reversal theory, anything like that. If candles are breaking lower, the most high probability setup is that candles are going to continue going lower until they don't. And that's as simple as that. There's no guesswork. So we've got all three steps right in front of us here. We've got our bias, we want to sell. We've got the levels we want to sell from, and we got the level we want to sell to. And that is it. Then you drop to your smaller time frame, and then you wait for one of two things. You wait for price to pull back to, and we're going to take all our drawings off at this point, and we're just going to mark it up with this because it's got everything. You're going to see, okay, this is when the day starts, this gray, long, vertical shaded area. You can see it's got our liquidity marked up and all those levels we just marked up. And now what are we doing? When the day opens, I'm going to go ahead and bar replay. That way you guys can see what we're working off of. You want price to trade back to these levels. Think of it as a break and retest, but just not any break and retest. We want it to accept those levels. You have to think about it this way, right? When price broke lower than these points way, way, way over here, right? Let me even actually go to the 1 hour. That way it's a little easier to see. You can see right here. Think of these as range lows. They're daily lows, so they're range lows. A daily candle is a range, so these are range lows. So the first thing we want to do is we want to trade back inside of it. Why do we want to trade back inside of it? Because we want it to re-accept the range, right? We want it to re-accept the range, and then we want it to, after it accepts the range again, so what we need for it to accept the range is we need a close into the range. What we need for it after it accepts the range is to unaccept the range, to get back outside of the range. So that's the first thing you're really looking for. Okay, right here is where we have it accept the range, and then we have it immediately after get back outside of the range. A little bit before Asia, you'll notice too, a lot of the best setups, I would say, are coming between 6:50 6 p.m. Eastern, kind of when the rollover just happens, and midnight. This first 6 hours of the day, I've never really talked about this that much. That's when the highest quality setups are coming. Why? Because they have the rest of the entire day to make their move. Do we always get it like that? No. But when it does, it's so much easier. That's also another reason. We'll go into the other bigger reasons why I didn't take CAD JPY and AUD JPY. But one of the big reasons too is USD JPY happened before, it happened earliest. It happened between 6 p.m. and midnight. And so the other trades happened during London. They played out beautifully and it was great. But there was still some other reasons on why we didn't take those trades and pick this one. Now that we get basically the next thing though, once you've accepted the range and gotten back out of the range, we want to continue lower, right? So this is where we should start to expect that candle continuation theory to happen. This next daily candle should just continue lower now and run liquidity again, where people might have their stops if they're trying to reverse this trend. You could even see it looks kind of bullish in here, right? Well, what are they going to do? It's all this liquidity in here that is going to get taken out. That is the retail trap. Now, we can't just have price get back above these levels and then get back below. What do we need? We need one of two entry models. We either need an inversion fair value gap or an engulfing. And what's an engulfing? It's the candle ranges on the 15-minute breaking lower. And you can see that's what we get here. We get the candle ranges breaking lower here. That's enough. We don't have any inversion here, but that's okay. There was one in here, but that had already happened. But we do get an engulfing. This candle does break lower, and we get an entry right here. Now, I personally, because it's just been working out beautifully for me, and I think today it worked out pretty nice if you had to ask me, I've just been putting my take profit at draw on liquidity. I've been doing this for a little bit now, and then for my stop loss, I'm just considering it a safety net. I just want to put it at 1-to-1 with my with my take profit. That's all I'm doing. Let's get it exactly 1-to-1. And then I'm just letting this trade play out. Because in my head, there is a significantly higher probability of price going here before going here. And that makes it so I don't have to manage the trade. It gives me all the breathing room in the world. But you can do it however you want. You can put a tighter stop. You can take multiple entries. You can take partials. You can manage the trade. You don't even have to trade it to full liquidity. You can basically, like, if you wanted to measure 50% and just target 50% of this move, you could do a million different things. I'm just showing you guys the simplest and most basic but most effective way to do this. And that's just to trade 1-to-1s. And you got to win 6 out of 10 times to be profitable with that. And you're going to see you're going to win a whole lot more than 6 out of 10 times when you start dialing in your trade selection. So this trade, it almost did lose, but it did play out beautifully. And I can't believe it actually pulled back as much as it did against us, considering the weekly and monthly being so favorable. And I'm going to show you that part next, because that is the part of this video where I'm going to show you guys why we picked USD JPY and why we didn't pick CAD Yen or AUD JPY. And so we're going to get out of our replay. This was the trade though. And now I'm going to show you guys, we're going to go just back to the daily, and we're going to look at not just the daily version of what I just showed you, but the same exact thing on the weekly and on the monthly. So I'm going to show you guys, we're going to turn off the daily, and you're going to see the weekly. Now what's the weekly doing? Oh, the weekly's actually going lower too. The weekly's breaking below these points, and the weekly's also bearish. So we can see our weekly levels here. I've got multiple CCT levels on here, so I could just turn off the weekly, turn on the daily, turn off the daily, turn on the weekly, turn off the weekly, and turn on the monthly. Now I'm going to show you too, the monthly is a little bit bullish, but here's the thing. These monthly POIs have already been played off of, they've already delivered liquidity, and we're not above them, we're back below them. So what are we doing next? We're looking at our other pairs, and we want to see the same. We want to see which one's got the highest probability. Now you go to CAD JPY. Yes, we are bearish on the daily. Now let's go to the weekly. This is the most important part of trade selection. CAD JPY is bearish on the weekly. Now what happens though when we go to the monthly? We go to the monthly, and we hadn't traded back to this POI yet. We formed our liquidity up here. We haven't traded back to it yet, and we're actually right on a monthly bullish POI. The orange is bullish for me. You can mark it up whatever color you want. This is the monthly POI. So why am I not taking CAD JPY? Because the price could technically go up from here. Now, that's why I picked USD JPY over CAD JPY. Let me go back to AUD JPY and kind of show you the same thing. Now, AUD JPY, the shorts are right here on the daily. You can see our daily levels, obviously bearish. Now, if we go to the weekly, you can see on the weekly, we're actually a little bullish, right? So on the weekly, we're kind of playing around a bullish POI right now. And then you come to the monthly, and you can see we're actually really bullish on the monthly for AUD JPY. And I'm going to show you this too. On the monthly, we were actually, you can see our trade, when we did take this, we were not above a monthly POI. So this trade actually was not above a monthly POI at all. And it did eventually get above it, but it got back below it. But hence the 1-to-1 safety net, it worked out for us. But yeah, we did not have any higher time frame opposition when we took this trade, because if you flip the monthly on, in order for us to not have wanted to take USD JPY, we would have had to been above this monthly level to target up here. So that's why I didn't have any concerns. You know, there was just no opposition on the monthly or the weekly for USD JPY, and there kind of was on CAD Yen and AUD JPY. CAD Yen being more so, you know, I think it was the weekly that was against us kind of, or no, the weekly, no, it was the monthly on CAD Yen that was giving us problems, and the weekly on AUD JPY. So it left us with our highest probability setup, USD JPY, and this is CCT. It shows up every single day. I'm going to keep, you know, taking these trades. I'm going to keep showing up. I'm going to keep breaking them down for you guys, and I'm going to get as many people as informed as possible that there's, quite frankly, in my opinion, only one way to trade. So, not only one way to trade. Obviously, you guys know there's a lot of ways to trade. There's a lot of profitable strategies out there. But for me personally, after trading for 5 years, this is the only way that I'll trade Forex anymore. It's the only way. So, and you can trade it on gold. We trade gold and NASDAQ and ES and all of those in the morning too. I do a lot more scalping with those. Not scalping, but day trading. We're going to have some videos coming out next week about the 1 hour and 1 minute version of this, breaking down the same exact thing we've been doing here with the daily and 15 minute. But yeah, all that being said, guys, we're going to sign off for this video. If you guys do want to get the indicator where it just plots all these lines for you, what you could do is you get the indicator, you add multiples of them. So basically, I'll show you guys this. I'll always, you know, I've posted pictures of my settings for those of you guys that have the indicators too. I'm going to show you guys right here. If you guys want to pause the video and look through this, I'm going to show you. This is, you know, the daily one I have. We'll go down some. You guys can pause it, look at it, and all of that. This is the daily one I have on, and then I just copy and pasted it, and then what I did is I just put a weekly on. So I just switched, all I did was switch these to weeklies, and then I did the same exact thing for the monthly, and I just switched these to monthlies, and it makes it super easy because all I do is I basically, you know, if I want to look at the weekly, I just turn the weekly on. If I want to look at the monthly, I just turn the monthly on. If I want to look at the daily, I turn the daily on. And you could have all three on at once. I wouldn't recommend that. I would recommend having, you know, one on at a time, but you could just copy and paste it in here. If you guys do want to get involved with that, let me see, where is it? Right here. You can check it out here on Flux Charts. The link's in the video description below. If you want to get access to it, it is a premium indicator. It does support the channel, and it's what we use every day. So if you want to get involved with that too, check it out. Link's in the video description. But I love you guys. Another absolute banger. Proud of all you guys hitting these two on your own. And hopefully these videos are going to help those of you who aren't doing it on your own yet to get to the point where you are. But I'm signing off. I love you guys, and I hope you guys have a great rest of your day.